Now you go to any builder, the salesperson will greet you with water. 6 months ago, you had to make an appointment even to enter. The doors were locked. They would actually scare away the buyers who are coming to buy the property. So
Is asking, where do you see the biggest challenges for buyers and why?
and the growth has just started to pop up. You'll see more rate of appreciation in that area. And it could quickly turn from buyers to the seller market just like that within a week. If the interest rate drops by 1.5–2%, it will be a seller's market. So there will be so many buyers. Be a buyer in a buyer's market. You want to be a seller in the seller's market.
Good bet to invest in Phoenix or Indian metro, like Bangalore is the location he specified for a good ROI.
The challenge with the starter is people are unable to make up their mind if there is a right market to jump in or wait. So the ambiguity of the first-time home buyer is at the highest levels right now. Then for the mid-level people who are upgrading from an original first home to another home, the ambiguity there is the interest rate is high. Plus they are unable to sell their current house for the values that they thought that they would get 6 months, 8 months ago. So people who totally wanted to upgrade, what they are doing is they're just remodeling their current house and they're not jumping it to the next level. Instead of renting, buying a house is a no-brainer. But once you get to the luxury market, a lot of people are not sure of the ambiguity with the recession and the business, how things are going and with the interest rate. So they're all stagnated. A lot of the luxury offers that we are seeing is contingent upon them being able to sell their existing house. So if people are able to sell their existing house, they're okay to upgrade because they bought their home at 300,000. Now they're selling it for 800,000. So they're taking the 500,000 because they lived in the house for 2 years. They're taking the 500,000 and buying $1 million house. So we are seeing that, but the momentum at which it used to happen 8 months ago is slowed down. And we talk about the ultra luxury, which is Paradise Valley market. It is immune to the changes in market or the interest rate. $8 million, $10 million properties are being purchased for cash. People like Mike Tyson, Sarah Palin's daughter, then we have Michael Phelps, all these guys like big Olympians. They are really ultra rich people. So for them, if the market has no bearing, that's why you don't see as much of movement or challenges in the Paradise Valley and North Scottsdale market. Chandler, Gilbert, we consider it as best starter to mid-level homes. So there we are seeing some challenges with it. What the biggest problem that we see happening is when you're totally in the buyer's market, people don't want to jump. They want to wait until then the market drops. Like right now the market is dropping. People want to time it to the bottom for them to buy. It is just impossible to time the market. There is no way any one person can predict what the market is going to be. So you have to jump in when you are ready. Every market has challenges. It could quickly turn from buyers to the seller market just like that within a week. If the interest rate drops by 1.5–2%, it will be a seller's market. So there will be so many buyers in the market, you can't negotiate anymore. But if you buy it and if the market still goes down further, we just hold on for the market to come up.
Yeah, so it's like if a single positive news comes in within a day, the whole market can change.
Totally. Yeah.
So the follow-up question for Nitin, which metro cities do you feel will have the best buying opportunities?
So I remember the story of this priest who used to work at the Chandler temple. He called me. This was during the recession time. And he called me and he said, I have $30,000. And he asked me, where should I invest? $30,000, it needs 20% down. I told him, you can't buy anything in Chandler, Gilbert. The only place you can buy is in Maricopa. Maricopa is about, 45 minutes from the city. And I told him I personally don't like Maricopa because it's not accessible from the freeway. And then he said, this is the only money I have. I want to invest. I'll invest in Maricopa. So we invested in Maricopa. We bought a home for around 200,000. And fast forward that after 10 years, we sold that property for 600,000. Around the same time, I had somebody else buy in Chandler. Similar. I mean, he invested a little more, but if I look at the ratio, he got much higher return, like much higher return investing in Maricopa.
Chandler was less.
Chandler appreciation was less than Maricopa. Even now, if you look at the top cities with the highest rate of appreciation, you see all these cities called Goodyear in West Valley, and you see Avondale, you see Buckeye, and you see all the like Lavine, you Chandler and Gilbert is somewhere like lower than those areas. The reason for that is those areas, they are very affordable right now, and the affordability is going to turn quickly. The best rule of thumb is, like we talked about, right? You go to areas which is like growing right now, they will have the highest rate of appreciation. Areas that have already appreciated, who are already desirable, they will they will not shoot up as quickly. But you have to strike a balance between what is desirable to what is the location that you want and the free places that you frequent and all that. I would bet that the West Valley will be growing a lot because all the freeway system is now established, and also East Mesa is also growing a lot. All the freeway system, the 202, 74, all that is new, and the growth has just started to pop up. You'll see more rate of appreciation in that area. Chandler Gilbert is already established, so you'll see appreciation, but it will not be as dramatic as those areas. Buckeye, Lavine, those fringes of the West Valley, I think it has a lot of potential. As an investment, I would invest in those areas, but for primary home, you have to see where it makes sense for you. You don't want to live in like Gold Canyon and commute to Scottsdale. It will be outrageous. Unless you are coming from California, you're used to the commute.
The next one is from Dinakar. So he's asking, is this a good time for buying my first home? Not as primary, but as pure investment only. I mean, one scenario I could think of is like buying a property here, moving to a different location or different country, and then getting some rental income out of that, or maybe wait for it to appreciate along with that.
It's a good dilemma a lot of investors are going through. For the past 3 years, people have been sitting on cash, trying to see if it's a good time to jump in or wait. So what's happening is the bank is sitting in your stocks or in your savings account. It's earning, let's say, 1% in a savings account, right? Well, the inflation is 11%. That means the value is being lost. It's like really going down. If you don't invest somewhere, where do you invest? Is a question. You can invest in something that you know that goes up for sure, like 100%. But nobody knows that answer, where it goes, how it goes. If you're investing in real estate purely as an investment perspective, I personally always look at cash flow. Does it cash flow? If it doesn't cash flow, because the interest rates are higher, it doesn't cash flow in most of the Phoenix metro. You have to really go to the outskirts, or you have to buy very old property like 1970s, 1960s. There you can see cash flow coming in because the rate of appreciation is almost saturated. So you have to look at cash flow and see if it makes sense and if you are able to sustain it for the next few years. We are seeing that the market right now is in a downtrend. We don't know how long it's going to go for a downtrend, but it's going to go down until the interest rates turn around. Interest rates already went down by almost 1% from November to January. So in 3 months, 1% interest rates are down. So if it goes down another 1%, then you'll see buyer frenzy, then the home values will be up. So my suggestion is look at the cash flow. If you're happy with the cash flow that you're seeing, with the interest rate that you're going to get, then you should buy. If you're not happy with the cash flow, go to the outskirts and buy. West Valley, new builders have so many great deals right now. Builders are trying to get rid of their inventory. You can negotiate with them at a very good price. They're even buying down the interest rate. I've seen Lennar offering like 3.75 interest rate. So you can negotiate. Before they used to say only primary home, now they're offering it for investors. So explore all those opportunities. I wouldn't wait for buying because real estate is a long-term plan. You buy and wait. If you wait and try to buy, then it might be too late. So it's better to buy. But when you buy, you negotiate aggressively right now. Like right now, sellers are desperate. You can negotiate a lot. Grind it to the stone. You can negotiate with the builders. So I would do that. I would not wait.
The follow-up question from my side, like, what are some of the builders, like you mentioned, Lena, what are some other builders that are giving you buy-down opportunities or where you can negotiate?
Every builder is giving you closing cost concessions, and with that closing cost concessions, you can use them to buy down the rate. So right now the market rate is around 5.5. So you can buy it down to 3.5, 3%, so that your cash flow will be better. So all the builders are doing it. Pretty much all of them have jumped on the bandwagon of reducing the interest rate, because they have realized that unless the interest rate is low, people will not buy. So to move the inventory, they have come up with these concessions, and you can negotiate a lot with the builders now.
So next question from Dinadar again. So it's a follow-up question where he's planning to buy a house for an investment, but now he's asking if it's a good bet to invest in Phoenix or Indian metro, like Bangalore is the location he specified for a good ROI. Which market is hot?
I personally found that the Phoenix market has better cash flow than the Bangalore market. I had an opportunity to buy something in Hyderabad before, and my cousin ended up buying. I didn't buy it, and then he was telling me the struggles of when he wanted to sell it. First of all my other uncles and aunts wouldn't let him sell. They're like, you should keep it for your kids. You should keep it for your kids. They would not. They would actually scare away the buyers who are coming to buy the property. So if you buy it there, first of all, you have to deal with all these social pressures of which they will not let you sell it. Okay. Like when you want to sell it, you can't sell it in Bangalore. Has been my experience of seeing my cousin. Second thing is, in Phoenix, you can buy property with as little as 10% down for investment properties. So that kind of leverage, you can do it in India. It's the biggest thing. Plus, even the Bangalore market, the homes are pretty expensive. And if you have to come up with a lot of money down, how much down? I don't know how much down they want in India for an investment property.
Investment, I'm not sure, but I think 10% is usually
10%, so it's almost the same.
okay.
How much is the interest rate in there approximately?
Right now, it should be more than 8%.
More than it. So the money is more expensive there than in US.
Yeah, you can say that.
And then if you're buying an independent house, it's fine. But in India, you have to worry about the title issues also, right? At least in Hyderabad, they sold the same land to like 10 people and everybody is fighting over that. Nothing crazy like that is there. I like Phoenix market because it is growing. It is stable. You can leverage for a lower down payment in Phoenix. I know for sure that the interest rate is lower here and the cash flow is higher in Phoenix. And since you are living in Phoenix, it's right here and you can control it better versus you trying to rely on your cousins or your brother or your dad. And I've heard a lot of horror stories of people selling the property there and trying to bring the money, and then the exchange rate is upside down. Like even though you made a lot of money, you bought it at 85, and when you're ready to sell, the dollar will be, I don't know, 100 rupees, and then all the appreciation is melted away. Now you're trying to bring that money. Then they try to sell it in black. Some they'll give cash, and that cash you cannot deposit and bring it. So many headaches. After hearing all of that, we never invested in India because of all this thing that happens in the residential. Maybe there are good returns. I don't know. I really don't know about the Indian market, but I know Phoenix market is stable. Your aunts and uncles are not going to pressure you not to sell. You can sell when you want. Everything will be in white, so it will be clear cut. You can depreciate the asset and get some tax benefits out of it. Cash flow will be better. So I like Phoenix.
And I think one more point would be the ratio of rental income, like cash flow that you can get here versus what you can get in Bangalore. I think that ratio is better here, you think?
Absolutely better. At least the comparisons I made is better. There could be some exceptions, like if it's in a high-tech city and if it's a very desirable rentable area. But in India, I have seen that most of them are like high rises they are building. There is always somebody competing with you. If you say the rent is 50,000, that guy will say it's 40,000. So it's really cutthroat there. But in Phoenix, it's better. I like Phoenix, but I don't know enough about the Indian market to really give him a strong advice.
So along with that, there was some more message that he has attached, that he is looking for a house like an investment option right now. So with the news of several companies going for layoffs and the interest rates not coming down in next 2 years, I'm not sure if it will not come down in next 2 years. I mean, that
Right.
depends on the
Depends,
government.
yeah.
Nobody can say that for sure right now, but he has mentioned that. So he has that like dilemma because of these two situations, layoffs and the interest rates not looking good right now. So is it worth to invest here, is his question.
I mean, we can rely on one of the richest man's, Warren Buffett. What did he say? He said that you should buy when everybody is selling, you should sell when everybody is buying, right? So that is a philosophy we have to be in. Now. It is the time you can negotiate with the sellers. You can have a strategy in place. The interest rate is higher, so you can refinance after 2, 3 years when the interest rate is low and bring down help with your cash flow. If you wait for it, for the interest rate to go to acceptable levels, when there will be like 10,000 buyers competing with you, then you lose the buyer market advantage. So that's why I feel like we are buying right now. We are negotiating very good deals from the sellers. We are buying right now, even though the interest rates are higher, with full intention that we might be refinancing in the future. Worst case, if we have to hold it for the next 4 years without being able to refinance, we are cool with it because we know ultimately we are going to get rents, and whatever we are unable to rent it for, we are able to pitch in with the earned income. So I wouldn't worry about shopping right now because now is the time. Now you go to any builder, the salesperson will greet you with water. 6 months ago, you had to make an appointment even to enter. The doors were locked. Doors were locked. You can't even go see the models. Imagine the switch. Now you go, they give you water, they invite you into their office, they explain to you everything what is happening. What kind of reception you'll not have after 6 months or 8 months? That kind of negotiation. Now you can openly negotiate. Okay, can you give it to me for 60,000 less? So that negotiation power is extremely important when you are buying. So this is the best time, I would say.
And if you ask for 60,000 negotiation, they wouldn't say no straight away.
Yeah,
They would be willing to talk on that topic.
absolutely, they would be willing to talk. Like one guy who is buying right now, he told them that he wants to get guarantee from the basic school that his kids got an admission. Only then he wants to buy the house. So the builder wrote the entire contract, and in contingency, they gave him 30 days to make sure that he's getting approval from the school. This is unheard of 8 months ago. They didn't say, they said no, no, no contingency. You have to pay $25,000 non-refundable. Only then we'll buy. Now he has this contingency and we are negotiating the price and the builders are okay with it.
I think I heard from one of my friend that for the same house in a community, they had a list. Like there will be 20 people who put their name for that specific house. And if the first person said no, then the next person will be there, or there will be a lottery even for that single unit.
Yes.
But now that seems to have changed.
Now the lottery is for the buyers to make which builder they'll go to buy. I mean, this opportunity, the opportunity is right here. We tend to miss it. I feel that lot of buyers are getting carried away with the news sometimes because the way the news works, it's the same with anything, right? Like even we are doing this when we see the TRP ratings on the news and the number of views they want on the Instagram or Facebook videos or everything. Everybody want more news, right? They want to dramatize so that they can get maximum views. There was an article in the Goldman Sachs saying, okay, they are expecting that the market will crash like 2008 in Arizona, Texas, and Florida. They just put like 3 or 4 states. Real estate is hyper local. Granted, it might crash there. Granted, they might think it, but they are putting all these states names and they are saying the list of states wherein all this is going to crash. So that means immediately they are attracting so many people jumping onto this news article to consume it. And the article's main goal is to attract people to jump onto the article. That is their main intention. So we are all falling prey to that. So you have to come out of it and see, look at the cash flow. Does it make sense? Do you think The property value based on the rents, the way they are going and the way the inflation is going, where the rents will be. 2-3 years from now, will the rents catch up? And if you're able to refinance, how much will the cash flow be? So all those calculations have to be factored in to get convinced. If it doesn't work out in a city that you're living in, go to the outskirts. Cash flow works out great there. And buy something there. I would say be driven away by the fear psychosis with the news articles, because those articles were dead wrong so many times. So many times they were like dead wrong, but still people who rely on those just lose the opportunity. It doesn't matter to the newspaper. Like if CNN writes something, nobody is going to go challenge them saying, you told me not to buy, I didn't buy, now I lost 500,000. Nobody will challenge them. They know that for a fact. So we as a consumer have to get educated with what will happen, and we have to look at the historical values. Yeah, it's going to go up and down. But I wouldn't shy away from stepping out of your house and shopping for homes today, because market is like extremely favoring the buyers right now, and the pendulum is going to swing the other way before you know it. Interest rates have dropped by 1% from November till January. So people are not noticing it because it's not being talked about as much. But somebody is going to publish an article, then there will be frenzy again.
And the recession talks have been going for few months now. Still, it's not declared, and we don't know whether it will be declared or not, right? So until we have a clear direction on that, I think people will have that kind of confusion. So the main point I am taking personally is look at the situation from a different angle, from a different viewpoint.
Yeah, I mean, recession, we are probably in a recession already. Recession, the question is, when will recession end? Is when all the deals end. When recession ends, deals end. That's it. So if you want a deal, you want to shop in a recession. That's how I see it. Buildings that we purchased here, we bought it during the worst time. When I say worst time, when the newspapers were making it sound like doom and gloom, I would say that's the best time to buy. First, I mean, when they're saying that all this recession is coming, is when actually the best deals are, and that's when the sellers are desperate.
Which is right now.
Which is right now. That's an opportunity time.
Yeah. Okay. I hope, Dinakar, you got your answers, which are also very high quality. Aparna is asking, when will be the best time to sell a property in coming future, considering the home valuations are going down?
The real estate market is cyclical. It goes up, it comes down. It goes up, it comes down. We've seen it happen time and time again. If somebody has to sell it within the next 12 months, I would say it's better that sell it right now, because as sellers, we want to maximize the profits, but we can't be too greedy about it. And I say too greedy because people who are selling right now, the chances are they bought the home at least 6 months before. Home prices have dropped about 10% in the last 6 months. So if they already bought it before that, then they might have, I'm assuming that they have already logged in some appreciation. If they bought the home for 400, they used to sell it for 650, now it is down to 600. You already logged in 150,000. I would say you should sell it right now than waiting for long, because it's all speculative on depending on the interest rate. If it comes down, if the interest rate comes down, all the buyers are back on the market suddenly, and then the home prices will start to again readjust. I would say if you're already profitable in your asset, I wouldn't leave the equity to thin air, because there is a chance that it might get resolved away if you're unable to hold it for the next 2 more years. Because in the next 2 years, there is a lot of market adjustment happening. If you're able to hold it for longer than 2 years with no sweat, I would say keep it. Real estate is an asset. You don't want to sell it unless you have to sell it. My suggestion to Aparna is, don't sell the property, rent it and hang on to it. Keep it for the long term, maybe 5, 10, 15 years is going to give you more returns, and don't try to sell it. If you're trying to time the market, if you have to sell it in the next 1-2 years, I would say just sell it immediately, because the market is very volatile.
Okay. So I think I hope Aparna got the answer for your question.